basically what we are looking at today is just the macro time frame of not just crypto markets, but most investment products as well. So I'm going to take the example of mainly the normie markets, which is the Dow, the S&P, and the Nasdaq. So starting with the Dow, as you can see, we sort of like if you want to look at trend lines, we were riding this uptrend trend line since October last year, and now it looks like we're tapping it again. I don't know if we will be able to hold, but only time will tell. I think today is Friday, so hopefully when markets open, we do see a little bit of a bounce, and we do see some upside, but we do have, in saying that, we do have levels of support to hold. So that is one thing that is good. So if we hold that, then we look for more potential upside. Looking at the Nasdaq's actually below its trend line that we had riding up this year. So, but we are finding there is a little bit of a soft support over here. As you can see, we hit resistance here, we broke it, sort of tested it, bounced as a support and bounced up. So it depends if we actually manage to hold these levels and then move further up. But for those that do trade trend lines, we're kind of like, if we close today below this, it doesn't look very, very pretty. So yeah. The S&P is trend line not really like there in a sense for us to follow because it's a rather flat trend line. But we do have support levels. So we have one right where we are right now at 43, 42, and we have it ranges down to 43, I guess, would be a good level. Then we're looking maybe 41.53 levels, 41.53, 41.80, like that, just to hold. If we do end up failing that, we're gonna go back down to maybe 4,000, maybe even lower. And what that brings me to is this. So right. I hope you guys can see this. So the main thing that my topic is today is that is the concept of stagflation. So what is stagflation? Basically, it is when an economy has a higher inflation rate, high unemployment, and slow growth rates. So basically, you're looking at CPI or PCE, and then you're looking at unemployment, and then you're looking at real GDP growth, right? So this is being the general equation if you are looking at it, and you would be able to get a number answer. So yeah, so you get your CPI year on year plus your unemployment rate minus your real GDP growth, and you get like a figure basically, right? So the higher the number is, the worse the economy is. So what does that mean? Because we are starting to see high unemployment rates and we are starting to flatline on CPI, but how does that affect? So those two sort of neutralize each other out, but high unemployment rates make real GDP growth end up negative because not as many people are earning money anymore. So that's something that we do need to take into account. So currently, this is the of the market. Uh, we are looking to see hopefully rate cuts this year or most likely next year by Q1, Q2 in the US, in the ECB as well, hopefully. But we have to wait and see for the inflation data and all that kind of stuff as well. So if this ends up, if we do get a hike and this year and no rate cuts next year, kind of just see a lot of issues going on with the S&P and all that kind of stuff. We do end up breaking 4,000. We go way, way, way lower. So yeah. Q3 and Q4 earnings are coming up for a lot of companies. So that might be a really bad thing because we are yes, there may be a bit of a boost during the summer and winter months in terms of employment and revenue and all that kind of stuff. But as we are running out of cheap labor and people do need more money to survive nowadays because the cost of living has just gone crazy. So people are not going to end up working for cheap because they're running out of money, they're running out of savings, whatever savings they've had and all that kind of stuff. It's become a really, really bad situation. Um, the other thing that we are looking at is usually, historically speaking, emerging markets such as Brazil, Chile, China, Asia, and Africa and all that kind of stuff. Less so Africa, but more of the BRICS basically. Um, those guys end up leading the monetary policy decisions for a lot of what the US economy sees. And why am I focusing so much on the US economy? Because that's where a lot of the liquidity is coming from, right? So yeah, so we've seen a couple of rate cuts already in Brazil and China as well recently, and China is having a huge property issue at the moment with Evergreen and Evergrande or Evergreen or whatever it is, and yeah, it could be a huge sort of a collateral damage or falling start of the falling of the dominoes basically, and yeah, so once emerging markets do end up cutting rates, that usually means that the US and the ECB do tend to follow. But this is, of course, given that inflation does stable out. Yeah, and on the right, as you can see on the photo, I've put something in from Schroeder's, which sectors tend to do better in terms of during uh, during during periods of stagflation based on historical data, right? So you guys can have a look at that when you guys want to. Um, so cyclical usually means that there's a like a cycle to it. So usually when times are good, cyclicals do a lot better than defensives. Like when an economy is in a boom, then you tend to see cyclicals do really, really well. And then when the economy is like going through really tough times, cyclicals do end up suffering a lot. So it's like a cyclical sort of thing. And then defensives sort of have like a really good they have like a really stable sort of returns, right? So if you think about it as like, okay, a cyclical being like an investment in crypto, and a defensive being like a fixed deposit in your bank sort of thing, where you know the stable return, it's going to come every year, all that kind of stuff. Whereas if you put your money in Bitcoin, you don't know appreciation this year or like, you're going to lose money this year, all that kind of stuff. So yeah, depends on the economy in a sense. So yeah. Um, so we just look at this. This based again, all of this data is based off historical data, so we don't know if this will actually play out again. But yes, we just have to look at that. Um, so we spoke about the equation earlier of CPI on year plus unemployment rate minus the real GDP growth, right? So you do end up getting these figures like that. So as you can see in 1970s and the 1980s, we had really, really high periods of stagflation, right? And what happened during that time? There was people getting into a lot of financial issues and all that kind of stuff. But it also, for those people that managed to sort of weather the storm, they made a lot of money investing because these do show like really good investment opportunities, right? And as we can see, it's the same thing happened in 07, 08, '09 like that, and just after the housing crisis that we had in the US. And as we know from '08 to now, the bull cycle from 2008 to 2018 was really, really good payouts for a lot of people. So yeah. Then again, we had the COVID dip and a COVID pump in 2022, and whoever bought stuff and when the market was down during COVID, kind of just saw a lot of appreciation. Like stuff like you could literally just close your eyes and buy anything you wanted in COVID, and any IT sector COVIDs during 2x or 3x of your returns. So yeah. So what does this mean? It's just basically the fact that the moment this does start peaking back up, I'm not saying that we may not even reach up to 15, right? So let's just take an example, right? So estimated CPI is 3% for next year. Okay, so we just figure it out, right? So we just do 3, unemployment rate at being maybe 7, right? 3 plus 7 is 10, and real GDP growth being -1. So we got 11 already. What happens when we reach 11? Well, you do have a lot of FUD in the market and all that kind of stuff. And we're talking about normie markets. So you can imagine what's going to happen in crypto, because crypto is way more volatile, right? So yeah. Um, Here I have another chart. Basically, is the current inflation versus the core inflation. So the blue line is the inflation expectation by the University of Michigan, and the red line is the current core inflation, right? So as you can see, core is currently still way above 5%. This is based off CPI, right? Not PCE. So we just have to take that into account. So core is currently way above 5%, and if it doesn't come down anytime soon, like it is coming down, but as you can see, the growth rate from 2021 to 2023, where it was below 2, now we were above 6 to almost close to 7. We're back at 5, like 5.5 to 5, but the Fed kind of wants to bring it down. That's why rates have gone up so fast. Like this growth was just really, really scary. And the Fed wants to make it go back down to at least 4 or 3, right? That's what their aim is, right? They're expecting it to be just above 3, 3.2 to 3.4, like that. And at the moment it's 5.5. So they're expecting at least a 2% dip in the next year or so. So hopefully that plays out, because that means that we don't get to see stagflation, right? But then again, even if this stabilizes out and we do see economies slowing down, then you still have the slower growth factor to play into the equation. So that could still see us going higher on the stagflation chart, right? So let's say so 3.1 plus, let's say 5 or 7% is realistic in terms of unemployment rate during economic downturns. Yeah, -1 or -2, or GDP end up at like 11, 12. So yeah, it is a little bit scary. Um, yeah. Um, Now a lot of people I've talked to, they're like, oh yeah, but the government will just end up doing what they always do and just give people subsidies in the US and give them handouts and all that kind of stuff, which is linked to MMT, which is modern monetary theory. um, I don't think that that's a long-term solution though, because by them doing that, it's kind of gonna keep pumping the just going to keep pumping the US debt that they have accrued already, which is already something like what, like 10 or 12 trillion dollars at the moment. So yeah, I don't think, if we do end up doing that and the US just ends up going into more debt, how are they going to pay that off? going to print more currency, leads to more inflation. It's just like a vicious cycle that just keeps on going and going and going, right? And then in the end of the day, it's like we always look at the WM2NS chart that Chris always looks at. That's the more we print, the worse that looks, right? Normie markets are in a huge, like, bear market compared, if we look at that chart compared to the normal market charts that we look at. So yeah, it's not really feasible in terms of long-term sustainability. That's my point of view on that. And basically, I don't know whether we will end up going into like a higher up in the chart of the stagflation thing. We may not even touch 15, but we will see, because the scarcity of money has become a realistic thing nowadays. A lot of consumers have run out of their savings and all that kind of stuff. So it's starting to become a really big doom and gloom picture, especially in the US with all the reports I'm seeing about homelessness and all that kind of stuff. So yeah, and yeah. Um, are we gonna see a second wave of inflation, or are we gonna see rise in unemployment or a decrease in real GDP? Well, I can tell you at least two out of three is gonna come. So we may see a lot of people are saying, oh, inflation is going to normalize, all that kind of stuff. Yeah, okay, fine. But what about unemployment? A lot of companies are not really like hiring today. So I don't know. It's with increased unemployment comes decreased real GDP. So it's kind of like a double-edged sword, right? So yeah. What else do I have to add? Will we see the US dollar lose its global currency denomination? It's very possible in our lifetime, but again, like I say, it's very possible in our lifetime. I don't think it's next year. I don't think it's this year, but maybe 5 years down the line, maybe like 3 years down the line. It's very possible. So it's just that is a good sign for cryptocurrency, because we can sort of trade across to different fiats and all that kind of stuff. But yeah, that's all I have for you guys on this topic. Do you guys have any questions? To that dot. Gee. Oh man. Yep. All right then. I guess that ends my rant. It was a short one, but yeah. It'll take you guys some. It took me some time to digest, so I hope you guys digest it as uh, even faster than I did. So yeah. Um. I'll be really honest, and the short-term implication of this is we really it's very likely that we would see a lot more downside than a lot of people are expecting. And if things really do start getting even worse than they currently are, you can expect like a post-Cold War era kind of stuff. People are going to be begging for food, and a lot of homelessness will increase. governments are gonna really, really need to subsidize. And again, subsidizing back then and subsidizing now is a huge, totally different thing because just the sheer size of the global population increase. So back then it was relative. I would say you had less mouths to feed. Now you do have more if you want to really sustain your own economy through subsidies and all that kind of stuff. So yeah, that's just my point of view.
Can you hear me?
Yeah, yeah,
Awesome, awesome. Yeah, thanks, mate. It was I appreciate it, mate. It was really helpful and quite interesting,
yeah.
actually. I wish you could do it more often. Those kind of things, insights. Eh,
I don't want to because
I know.
I I'm inherently a very positive person. So when I do get all of this like doom and gloom stuff, it's like really difficult for me to like process it and share it with people. So yeah.
I know, I know. Me too. I'm way too positive as well, and I don't like even shorting the market, but or at least going like in the red or something. But I understand it. It's quite difficult to digest that. It's true.
Yeah. So I mean that's the main
But and this is the
reason.
reality, huh?
Yeah,
Guys.
it
So
is
you cannot hide
it
it.
is yeah, it is
It's happening.
reality, but yeah, it's
Yeah,
happening. So yeah.
exactly.
What
It's
can you
happening all
do,
over
right?
why.
You just gotta try and make it where you can, make the dollars when you can, sort of thing.
Yeah, yeah, exactly. But another just different question. What do you think about the situation right now around not around the world, just in America? Like if you look at America only,
Yeah.
without the charts,
Um,
without any numbers. Just what do you think personally about it? What's happening around that?
it's
What's
it's a
your
little bit hard for me to say because I can only go based off what I see in the news, right?
Mhm.
What I see in the news and what I hear from people. So I'm not there seeing it firsthand because I'm based in Asia. So, but based off what I've heard and what I've read, uh, situations are gonna get a lot worse.
yeah,
It's already really bad as it is. Like you're looking at San Francisco, huge homelessness rates. You're looking at Los Angeles, huge homelessness rates. I mean, yes, maybe these are only affecting the West Coast cities, but it will eventually reach the East Coast.
yeah,
There's no doubt about it. So yeah,
of course. And eventually, it's cheaper to buy drugs than food on the state.
yes,
So
yes.
yeah,
I
imagine
mean,
what's gonna happen.
yeah, I think like the whole like it's really sad that you can buy like fast food, unhealthy food, which leads to rise in diseases and all this kind of stuff is so much easier available or cheaper than healthier food,
Yeah,
which I feel
exactly.
shouldn't be the right way because unhealth like fast food and all that kind of stuff is way more processed than healthier food. So
Yeah,
the actual like supply chain costs is a lot higher. So it should actually be more expensive. In
yeah,
I'm
exactly.
speaking in
Should be
terms of
opposite.
logical sense, right? So yeah,
True. True. I mean, if you look like, for example, go to McDonald's and buy a full meal, and then calculate that what you're gonna buy it from that price in the supermarket. Nothing
yeah,
almost.
yeah,
You cannot calculate that. You cannot feed the whole family with the fucking prices what McDonald's give you in the
yeah,
supermarket. And
yeah,
doesn't even be
exactly.
the most expensive one.
Yeah,
And that's really
and I
fucked up.
mean,
Really fucked up.
yeah, and then you talk about even like in Asia, it's a thing about instant noodles, right? Instant noodles is like so cheap, but it's super processed. It's super
It is.
processed.
Yeah.
And then you look at like the same thing, the exact same thing, but in terms of like a labeled as a fresh noodles, it's like double or triple the price. It's like
Exactly.
you still
Because
you
it's fresh.
still got to cook it, you still got to buy other ingredients to cook it and all that kind of stuff, but it's still
Yep.
the meal ends up costing like 3 times more than what you would pay if you just bought like instant noodles and just cooked it at home. So yeah.
exactly. Yeah, it is. It is like that, and that's really fucked up. What we're going to, and it's really
Yeah.
getting scary
Yeah, I
every
mean,
day. More.
yeah, it is. It's really bleak and scary. It is, but yeah, I guess we just have to like it. If you're looking at it from like a survival point of view, you just gotta, you know, put on the pants and try and figure out where you can cut cost and all that kind of stuff, to
Yeah,
just make it
yeah, keep
by.
yeah,
Because
figure out.
if you can, like I said, if you can weather the storm, there's a huge chance that you will be a lot better off even 1 year after this storm passes than you would have been selling everything and like cashing in and just trying to survive sort of thing. Like I'll be perfectly honest, like a lot of the investments that I made in April of 2020 easily doubled or tripled by the time 2022 came about. So yeah.
Yeah, yeah,
So
exactly. I mean,
and
yeah, you
that's
don't see that.
not we're not talking about crypto, we're talking about normie markets. So those kind of returns for like a 2 year holding, it's already huge. So yeah.
Yeah, true. Yeah, I agree. That's it's difficult, and then not everybody is capable to do that as well now, especially
Sorry?
those days. Not everybody is capable to do that,
Yeah.
especially those days. So yeah,
Yeah.
let's
I
see.
mean,
Let's
I
see what's
don't.
gonna bring it. We are almost
Yeah.
through the year, so
So I
it's
mean,
been really bloody and red
like,
year, but
yeah, like the other thing that they could eventually do is because there is supposed to be an election next year, right, in the US. So they just trying to push the Ponzi even further, right? Kick the can down the lane sort of thing.
yeah, but that's
Don't
the
deal
only
with it
thing
now.
that's left. I mean, they can't do nothing about it. They just need to roll with it. And what they did, what's happened already, like in years, decades, or whatever, what they built up. I mean, you cannot destroy that and put a new system or put a new money around that.
Yeah.
You need to roll with it. You need to keep going with it. I mean, what should I do? I mean, destroy the whole country and build it from beginning? Like, forgot about it? That's not possible,
Yeah.
you
Yeah, I
know?
don't know, man. Yeah, you can stop it, bro. No worry. But yeah,